June 2026. For 2 decades, SpaceX was the mythic private giant, a company that simply refused to sit still, throwing itself against gravity and winning, over and over again. But then, in a single week, the sky itself got a ticker symbol. In this explainer, we're opening a classified debrief. We're going to look closely at the exact moment Wall Street tried to put a price on humanity's next industrial leap.
$1.75 trillion. Take a moment to just let that number sink in. That is the staggering valuation currently hanging over global markets. It's a massive, slightly ominous question mark. We're looking at a market value larger than many national economies, and it's for a rocket company. Well, at least it started that way.
As one skeptical commentator coldly put it, this whole first trillionaire headline might just be a mirror held up to investor psychology. If sentiment changes, that trillion can vanish just as quickly as it appeared. And that gives us a very real, almost thriller-like tension to unpack today. Are we witnessing generational genius or historical hubris?
Let's dive right into Section 1, examining the code red anomaly of this public offering. Here is the raw dossier. At roughly $135 a share, SpaceX stepped onto the public stage, selling about 555.6 million shares. They raised $75 billion in the process. The implied valuation sat between $1.75 and $1.77 trillion right at the open. And at the absolute center of this financial shockwave is Elon Musk, retaining around 40% of the company and a staggering 85% of the voting power.
The immediate fallout pushed Musk over a historic line. That 40% stake alone is valued near $866 billion. You add in Tesla and his other holdings, and this specific offering pushed his net worth over $1.1 trillion, the first paper trillionaire. But notice the phrasing there, on paper. This is mark-to-market wealth. It's the market's collective belief, crystallized into a very fragile price.
Moving into Section 2, we need to look past the ticker shock and uncover the secret origin of this machine.
You see, SpaceX didn't start as a trillion-dollar inevitability. This is a decoded log of impossible milestones. Founded in 2002, by 2008, Falcon 1 claws its way into orbit. In 2012, Dragon delivers cargo to the ISS. By 2015, they actually stick a land landing. 2017 brings the first reflight of an orbital rocket. And in 2020, Crew Dragon restores U.S. crewed launch capability. A fragile startup completely shattered the legacy assumption that only nations could conquer gravity.
And here is the industrial twist that changed the entire space economy. For decades, the rulebook said you threw away the hardware after a single use. It was literally like flying a commercial airplane across the country and then tossing it in the trash. SpaceX stopped doing that. By landing and reusing orbital-class boosters, they treated rockets like commercial aviation rather than disposable fireworks. This single breakthrough shifted the economics of everything.
Let's look at Section 3, where we introduce the second compounding engine.
A launch company with reusable rockets is incredible, but it isn't worth $1.75 trillion on its own. To understand that number, you have to look at the moment SpaceX mutated into a telecom giant. Traditional launch revenue is inherently spiky. It's cyclical and based on contracts. But Starlink transforms the business into smooth, recurring, massive-scale subscription revenue. Public markets are pricing SpaceX like a tech platform precisely because of this sticky global telecommunications network. And it creates this interconnected schematic, the infinite loop investors are paying for. Reusable rockets dramatically lower the cost per launch. Those cheaper launches let them deploy more Starlink satellites at scale. Those satellites generate massive subscription cash flows, and that cash is fed directly back into the next generation of systems, Starship. Success in one area mathematically accelerates the others.
So SpaceX isn't just a single company. It operates across multiple reinforcing domains: launch cadence, human spaceflight, a global satellite network, and a heavy-lift future. This layered, reinforced system is exactly why by 2025, their revenues reached $18.7 billion. They occupy the most advantaged position in multiple layers of the space economy all at once.
In Section 4, we drop the tempo to look at the ultimate wildcard, the looming monolith.
If Falcon and Starlink explain today, we must now look at tomorrow, Starship. It is the master switch for this trillion-dollar valuation. Designed as a fully reusable, next-generation launch system, it is the bridge from a launch company to a true space infrastructure monopoly.
It promises to massively lower the cost to orbit, deploy larger Starlink satellites, and serve as the key piece for deep space logistics. If it works, SpaceX becomes the backbone of a completely new supply chain.
But there is a massive flip side here: the expectation risk. The sheer scale of a $1.75 trillion valuation assumes a reality where Starship is a routine, regulated workhorse, not just an experimental spectacle on a live stream. Any major delays, regulatory friction, or safety setbacks could violently puncture this entire generational monopoly narrative.
Section 5. Let's run a rapid-fire scenario analysis to see what the future actually holds. Is this pricing a bubble or a bargain? Let's start with the base case. This is the grounded reality where execution gradually matches the hype. SpaceX remains the dominant launch and Starlink operator, Falcon stays the profit engine, and Starship progresses but unevenly. The stock swings with volatility, but overall market performance remains fundamentally strong.
Then we have the bull case. Imagine a world where Starship scales reliably and sooner than skeptics expect. Starlink version 3 thrives. In this scenario, SpaceX solidifies into humanity's true space infrastructure conglomerate. If that happens, a $1.75 trillion valuation isn't a bubble at all. It's actually just an early platform multiple.
But we have to look at the bear case. Starship delays and regulatory friction drag on for years. The public markets are forced to stop pricing SpaceX as a generational monopoly. Instead, they reprice it as just a premium aerospace telecom hybrid. It remains a strong business, yes, but the stock falls desperately short of those towering expectations.
We also have to map out the unseen gravity pulling at this company, a classified checklist of risks, the massive technical challenge of industrializing Starship at scale, brutal regulatory launch approvals, a valuation priced for absolute historic perfection, sovereign rivals, and crucially, governance. Elon Musk's 85% voting control severely limits external discipline. His speed and centralization are SpaceX's greatest superpowers, but they are also its greatest potential threat.
Finally, Section 6. Stepping back to look at the century-defining question.
Pulling back from the ticker symbols and the trading floor chaos, we have to look at the broader scope of human history. Space is no longer a sideshow. It's infrastructure, telecom, defense, and the next logistics network rolled into one. This is the central thesis of the new space economy. Are we looking at the modern equivalent of 19th century railroads or the early internet?
So, is this a trillionaire moment or just a prelude? It's a haunting, unresolved thought that capital markets are currently wrestling with. Is this the peak of a massive bubble or the opening bid in humanity's next industrial era? Like every rocket they have ever flown, the only way we will truly find out if this valuation holds is to light the engines and see the trajectory.